Thank you for this very nice welcome, ladies and gentlemen. I'm quite happy to be here. I know a few of your faces, but there are many who I do not know. My name is Thomas Richter. I'm the managing director of the BVI. Those of you who are not aware what BVI is, you all will know the big five: the elephant, the hippo, the lion, the leopard, and the same is for the lobbyism. That's the financial scene. So there are the savings banks, Sparkassen, the People's Banks, the Volksbanken, and the others. And we are the leopard. We are the smallest, but the fastest and the most beautiful ones. And these are the big five associations representing the interests for their institutes. One of the most important topics since the last elections was the old age provision, and this provision needs to be reformed, has had the need for reformation for a long time. The last reform happened in 2002, and this was the Retirement Provision Certification Act, which was introducing a certain form of provisions for the old age, called in Germany the Riester insurance. And this is just a present, a gift for the life insurers, because the two USPs of life insurances are here put in the center of things. That is the capital guarantee. That's one thing. And the other thing is the necessity to grant a pension. So there will be a cash flow until the last day of the life of the person. That's the two prerequisites of the Riester insurance, which is a natural underprivilege of asset managers. They cannot offer these kind of pensions. So Riester is made for life insurance companies. And from asset management, there are only three providers who did that: Union Investment and Deka. And after a few years, DWS went to them, but meanwhile, all three of them have left this system, at least in part. That's a matter of the guarantee and the provisions you have to make, and the accruals you have to make to guarantee pension payments with zero interest rate. And you see here the core problem. So basically, for many, many years, we have been waiting for a reform. And in all the years under Chancellor Merkel, we haven't seen any reforms. Although we've reminded the politics and the consumer protectors have reminded politics that something needs to be done. In the last electoral period, we were just about to get a reform of this kind of Riester model, which actually failed very much in the end, shortly after it became known that Olaf Scholz would become a candidate to become federal chancellor. He was at that time Minister of Finances, and his state secretary had has prepared the reform and developed it far, but then actually it went back into the drawer because other topics seemed to be more important. In the electoral campaign, pensions were a very important thing, and they didn't want to weaken their position. And for that reason, the reform actually never came to light. It's still in the drawer. Then a new coalition was formed, and we call it the Traffic Light Coalition. And as usually in Germany, they have a contract, a coalition contract. It consists of 300 pages, a very special thing in Germany. And this includes everything. There are dozens of work groups. One is the work group of finances. In this work group, the coalition partners asked themselves, what could we do with regard to pension provisions? And the result was that it became very clear it will be very difficult to find a consensus here. So in this contract, they didn't reach a result. And whenever there's no result, you will just postpone it and you will actually start a work group. So that's what they did. But the first topic they dealt with was, what are we going to do next to all the statutory side? Ms. Wohlfeil just said it. The second package of reforms took 1.5 years. Now it has been adopted. But what do we do about private retirement provisions? And here there are different opinions. The Green Party wants to get a government bond or government fund, sorry. They actually do not trust the financial economy. They say the sales, we could do without the sales costs. The government has to offer a product. We will make it obligatory or mandatory, and it's sold through the employers, so we can actually bypass the banks. And by this bypass, there won't be any sales commissions, and that will save a lot of money. That's the ideal model. FDP said, the liberals, in other words, they say, no, we want to get a competitive model. So we want people to be able to choose. No one should be forced, but we want to urge people by subsidies, like for the Richter product, that they do something, but what they want to do, they should decide for themselves. And this doesn't go together. A market economy regime against a kind of subsidy system, that is very difficult. And since at the end they had to finally get a coalition agreement, they said, okay, we will check it. That is in the contract. They will check which of the models would then finally be realized. And that is all. It's in the contract for the coalition, and so they could actually forget about it. Now, in the year 2022, nothing happened really. After 1 year, there were the first voices raised, say, hey, how about this fact that you want to check it? And the cabinet really reacted quite quickly by establishing a focus group. And the focus group, don't you laugh it, I was part of that focus group. Don't laugh at it. It's not a ridiculous thing. So this focus group had the order to review which of the two models should be preferred and how private reforms, which is the Riester product, could be improved. The Riester reform, which never came, how can that be improved? Now, the focus group consisted of 19 people. The secretaries of the ministries, one from the Liberals, one from the Social Democrats, one of the Greens. And each of the three parties was able to, or was allowed to propose one, or rather two professors. Two were proposed by the Green Party, two by the Liberals, and two by the Social Democrats. So 6 professors, university professors, 6 representatives from the ministries, that's 12. And then 2 consumer protectors, that's 14. And now you're asking yourselves, when is the economies, when will they be involved? So we had 14, and then some associations, myself and someone else, and the employers, and 2 representatives from insurances. I was the representatives of the funds economy, and then 2 employers. That was the focus group. The focus group met for half a year, once a month in Berlin, to have meetings of at least 6 hours. I actually totally underestimated this. I thought I could delegate this to our colleagues in Berlin, but all of a sudden they said we had to be there in presence, and it was really, really very, very hard. And the last meeting in June then took 12 hours. So I could learn for myself how political documents come about, like, for instance, this coalition agreement. Every line has a number, and then you discuss it line by line, word for word. And I don't know, that the whole report was about 30, 40 pages long. It took 12 hours to finally discuss this report, and then it was finished, and then it became a PDF, and it went to the Ministry of Finance, and then actually it was born, so to speak. And from our point of view, it's really groundbreaking. Why? Because for the very first time, this body of experts proposed that we don't need a capital guarantee for the provisions. And you know, it's not necessary to offer a lifelong pension payment. You can also have other models. And those 2 things are revolutionizing the whole retirement provision for the whole of Germany. I mean, there are a few here from the Frankfurt bubble. I'm also a child of the Frankfurt bubble. Actually, in the Frankfurt bubble, Well, I've been there for almost 30 years. They always say, why is there no subsidized, I don't know, or savings plans, a stock savings plan that's the best provision for old age? Why is no one doing that? And well, I grew up with that mantra, and I went to politicians and asked them why not, and they said, "Are you crazy? No, 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 never. We do serious things. We do old age provision, and these are politicians. They know everything about the statutory pension insurance and what kind of contributions you have to pay and so on. And then there's someone coming and telling them, no, let's do it at the stock exchange. No, 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 that's absolutely not possible. Okay. That is the Frankfurt bubble. In other words, the Berlin bubble was totally different. That was a different world, not compatible. In Berlin, there was the dichotomy between old age provisions and building up wealth. Old age provisions is everything that offers a guarantee and a pension payment. Every one thing not doing that is building up assets. It's nice. You don't have to prohibit that, but you don't have to subsidize it with other taxes and so on.
But that was the dichotomy. And this has now broken apart. So right now, we're still far away from having a law, and so far I'm really optimistic. But right now, I need to also show a little pessimism. So from such a focus group to a law, there is a long way, and we'll see how it turns out. But the report as such is a change of paradigms, because we have just broken up this subdivision, and there were only two voices against when it comes to the topic of pension. And I presented the participants of those focus group, and you can imagine who of those representatives were in favor of the life annuity, and who, but the rest was against. And then when it comes to the guarantee, it was 19-0. Even the representatives of the insurance companies were okay with the fact that guarantees are reduced. But the question is only how far this is possible. But what is more difficult, but I'm getting to this later, is a state government fund. But let's talk about the topic of private provisions. So the basic concept is that there is no annuity anymore, and so you read a lot. You read about generation capital, about stock pension. You heard about old age depots. Well, this is now the old age depot. And the Ministry of Finance has been working since July last year on a proposed law, and that should actually come in summer. And so 2 years ago, we had a reception in Berlin where we heard this too, not only by Christian Lindner, but also by State Secretary Schmachtenberger. And they all do think that this proposal is going to be presented in summer. And this is also about this old age depot. This old age depot you should be able to fill this up. But you can, of course, also buy a life insurance. This will remain possible. But you can also open up an old age depot. This old age depot, according to what the Minister of Finance thinks, should be stocks should be possible, but also bonds and funds, bonds, and individual stocks. This is, of course, well, the thought of the liberals. Individual stocks here, we have follow-up questions. So if I purchase a stock and I sell it again, and then I have this somewhere here in my checking account, is that still subsidized? Then I don't know how they want to answer these questions. These are details, and I don't want to confuse anyone, but this is the concept. This should be subsidized, and this should become a part of the old age depot. So there should be long-term savings periods, 20 to 30 years. Taking out money should not be possible. Maybe in case of real estate that you use yourself, but and there should not be a duty for pensions. This is still the problem for with Riester at the moment. So if if you're going into retirement soon, then 30% of your savings need to be invested into an insurance, and this is done automatically, and then, well, this is a shock for some people. So they saved 100,000, and then they see, wow, it's only 70,000 now anymore. And so if there is no duty for pensions anymore, and so if I can have such a plan up to at the age of 85, or well, if I can still continue feeling such a depot, or maybe this old age depot. This is something that we expect in the upcoming weeks, and I'm pretty sure that this is going to come. And a big, an important topic is always the help for people who earn low wages. So those with low wages can't be helped with tax reliefs. And it's also about the fact to make those people save for old age. And if they don't pay a lot of taxes, then tax relief is not very attractive. And so again, we're at a model of bonuses, of allowances, and this makes it complex again. Of course, this is the price. There is a certain level of complexity is probably not avoidable. And we all would like it to be easy, but if there are allowances or bonuses, then for those also for those for whom tax reliefs are incentives, then the state or the government also wants to decide where this is invested. And so they will not, of course, look into the depot and see whether individual stocks are the right ones, but they will need to see whether the funds whether all funds are subsidized, or whether, for example, complex AIFs are taken out. So these questions will be asked, and then the state will, the government will create a certification. So, and next to these allowances, we need a certification, and this will not be avoidable if it should be if it should be fair. But this is a great perspective, and I'm really looking forward to that draft. But I have but it is only a draft, and a report of a focus group is already a change in paradigms, but it's not a law. And a proposed law or draft is not a law yet, and the law needs to be finished within 12 months then, because with the beginning of the summer break 2024, it's the election campaigns that are starting. And so there's the summer break, and afterwards there's the election campaigns. So if this isn't finished by July, it's not going to happen. So we've got 12 months roundabout. So actually the situation is okay. But then there are political obstacles, and so then, as I said, where is the government funds of the Greens? They actually wrote an opinion to this, and they actually said that they rather had a state government fund. Where is that? It doesn't exist, and so that's why I expect that the Greens will oppose this draft, this proposed law. This state-governed fund is a difficult situation because also big parts of the conservatives, the CDU, they want this state-governed fund. In particular, the Hessian CDU, and well, the logic here is, I repeat it again, so consulting and sales are expensive, and so we have a mandatory supply via the employers, and so what's with those who don't adhere to those mandatory actions? But well, this should be answered in the first discussion round already. So I am a hunter. If I don't have an insurance, I don't get my permission. You are all car drivers, and if you don't have an insurance, you won't be able to register your car. But what what do you do if someone has a duty to create old age provisions, but they just don't do it? This is so. How do you enforce this? Are you going to send? This is the same like in Corona. Do you send a doctor and 4 policemen over to them? So or do you imprison them like yeah? So there is a that this is mandatory and people just don't do it. And the solution is we will have a backup solution, a default option. And this is what the government provides. And if someone says, well, okay, I'm not going to buy funds X, Y, or life insurance Z, then the employer automatically will pay the contributions to the state funds. This is risky because we have a similar model in Sweden, and I'm getting back to that later. Because many people just don't do anything, and the state has such a fallback solution, and then the state fund becomes the dominant player. Why? Because the state fund in terms of costs can't be vanquished. So the state doesn't have staff costs because the people working there are people who are paid by the state, and the state also has no marketing costs and no sales costs because sales is done via the employers. It's extremely cheap, and so as a private company, you can't do that. And the state has another thing. The state has the trust, and people will think, well, I need to invest into that state fund, and I'm in there, and then the stock market goes down, and then as in Corona, we have 1/3 of losses, and then the state will bail me out. At least when the tabloids write that the pensions are now gone. So what did the politicians do in politics? They said, okay, we're going to close down your store, but nevertheless you will receive money from the government, and they will do again. They are forcing the people into a state-governed product, and the state-governed product makes losses. The people get nervous. Politicians get nervous too, and then politicians say, we need to do something. They say, okay, we need to do something, or else the trust of the citizens is lost forever. Well, and then the government, vouches for the capital market risk. And this is the reason why the Socialist Party is against it. And this is like, and that's why they are an important ally of ours, and they supported me. And the Social Democrats say we already have a state-funded pension scheme. This is called Deutsche Rentenversicherung Bund, and the SPD, the socialists, the Social Democrats say, well, private old age reserves don't make any sense. But nevertheless, if you want to do it, you should not invest in a state-owned governed product. And so in this case, we have really enormous amounts that we're talking about there, which are already missing in the current pension insurance. So currently, every year, we have 325 or 230 billion euros that go into this state pension, and from them 220 come from the pension system, and 110 million come from come from taxes, and those 220 get less and less, and the other share gets more and more. And every year there is another shift. And so today we have already many big difficulties to stabilize the pension, the statutory state system. And then capital market risks, that's where the Social Democrats say no. Okay, so they're out, that topic. Us too. Life insurers are out too. So actually it's only the Greens who want that, and the consumer protectors, and half of the conservatives. And for the conservatives, the CDU, this is such a state-governed fund is something very difficult, because let's talk about Sweden. In Sweden, there is a system. I'm going to get into more detail later. They also have such a fallback system in the form of stock funds. This stock fund is called AP7. This AP7 has a volume of 100 billion euros at a population of 10 billion Swedes. Million, sorry. Million, sorry. Well, a minor difference. So 10 million Swedes, 100 billion the value of the fund. So 82 million Germans, 850 million billion in the fund. So 850 billion, that should be reachable. And so this AP7 funds has a market share of 80%. There are also private funds are acceptable, and all BVI members are there, so they're all in this Swedish system. But the market share of the state government fund is 80%. This is being reduced after some time, but 80% is a great start. And from our perspective, this model can hardly be beat. But why is that difficult for the conservatives? Because they have one model in which the voters are forced to invest. And with that, it gets extremely political. So we've already got lots of politics in funds management. ESG, all that needs to be taken into account. We have political questions here that need to be answered via the investment strategy. So what do you do with a fund that is that big and the entire country is invested in it? What do you mean what that is? So let's take as an example the diesel scandal from Volkswagen. So let's assume back then we already had a state-governed fund. In talk show in Germany, we only have talk shows, so there is a talk show, and someone will say, well, Volkswagen. So first of all, they screwed the drivers, and now the drivers need to invest in Volkswagen too. No, the funds need to sell Volkswagen, and so each individual investment of that fund can be made political if the entire country is concerned, and so with that, people can be motivated. And this is the difference to a state-governed fund that is not in the private old age provision. So pension provisions for civil servants, for example. And there is no direct relation to the citizen. Or the KENFO, you know, the core energetic disposal funds. And here the federal government bought off the risks of the disposal of the nuclear plant operators, and for that they paid 24 billion euros. Yes, there of course there are requirements for a state, but well, this is state money in a state governed system. In a private system, to be invested in such a state funds, this is entirely different. But currently it looks pretty good. We are probably getting quite a good draft, and then we will see how discussions will go in politics, and at the end we will have such an act, such a law. So, and maybe a couple of final remarks. Do I have the time for that? Great. So I really like to answer questions. So great. So what you can read currently in the newspapers is that there is this generation capital. What is this generation capital? Where does that come from now? Where is that in that entire system of coordinates? Well, this generation capital is that what remains from the stock pension plan. What is that now? This is what the liberals promoted. So, and this is the German variant of the Swedish model. And so, how does the Swedish model work? Well, simply put, the contributions of an employee, they are not put 100% into this transfer scheme, but only by 90%. And then you can select from a list that was approved from the Swedish state, and they also set the prices. So if you want to participate here, you can say that the state will tell you how expensive your product will be, and they say, okay, if you do it that way, you can be on the list. And from that list, the Swedish employee can select what they wanted. If they don't select, they are getting into this AP7 state government fund, which has a high market share. So what did the liberals well, they didn't manage to push this through. The Greens don't want that state-owned fund in the first pillar, but in the third pillar. In the first pillar, so in the statutory system, us as a fund company, we would welcome that. We would say, in the statutory system, the federal government can do what they do. It's their pillar, and when the government decides that part of the pensions are financed via the capital market, then they should do it, because we are ready with our products.
We won't be against that. We were always in favor of this stock-based pension, the Swedish model with the government fund in the first pillar. And as I said, the liberals didn't get their will, and so the compromise was generation capital, which means that the contributions, so the capital, is not coming from the pension contributions, but the government will take up some debts, will leverage it. So they issue government bonds with an interest rate of, let's say, 3%. Long-term return on the stock markets would be 6%. So looks good. So we can actually make some profit in the long run. Although one should never forget that a government bond over 10 years will have to be paid back after 10 years. So something will leave the fund in the end. But that's the assumption. And many years ago, I read an article that must be from a professor. I don't know where he came from, but okay, he said, well, Norwegians have oil. We don't have oil in Germany, but we've got a good credit standing. So let's make use of that credit standing for the old age provisions instead of oil. And that is what the liberals do now with this generation capital. It's a bet on the credit standing of the Federal Republic of Germany and on the fact that the interest rates of government bonds will in the long run always below the returns which you will get on the stock market, which means in this year we will get 12 billion in this fund, and in the next year we'll also get 12 billion into the fund. I'm sure the management of the fund is done by the same team, also doing the Kensal, which is it's the same team actually. And then we've got 24 billion in there. Interestingly enough, it's the same volume as the CAMFRO has, this nuclear power plant risk fund, so to speak. And the question is what is happening in the year after that in 2026, particularly when FDP will, the liberals won't be part of the government anymore, which is well possible, I would say. Now, will the next government again pay 12 billion? That's the question. The Liberals say probably not. They fear that it's not so. This is why they come back to the stock-based pension funds, because if the funding cannot be done by government bonds, but through the contributions from the pension payers, then the system is made in a way that it cannot be liquidated anymore. And this is again the question. We're still talking about this package 2 of the reforms. And again, the question, will we do a pension based on stocks or on other things? And when you never reach a result, and you always discuss, we will never get a result with the new act. So although it looks good in the near future. Thank you very much.